Hi guys, hi from Andrea Unger, and we want to talk today a little bit about grains, futures on grains. These are interesting futures and they allow you to develop interesting strategies, especially soybeans. Soybeans is a market that is open to different approaches. Really, you can develop trend following, counter trend, bias. It's open to many kind of approaches. Interesting is also corn for different reasons, because corn can be, as you can notice, it does not have a large dollar expansion during the day. The dollar volatility during the day is not that high. That means you can trade it with tighter stop losses. And in this case, obviously, it can be good for people who dedicate smaller capital to trading. Simply because you can easily trade corn with a stop loss of, let's say, $400, and $400 measured on an account size of 20,000 has a smaller impact in percentage. So you can actually adapt this to a risk profile that is not extremely aggressive. So it's good for that. As said, soybeans is good for many kind of approaches. Corn is a little bit harder to find something that works. Normally you end up with medium-term trend following strategies, which are fine, but consider that you might obviously have prolonged periods of drawdown in these kind of strategies. So if you are fine with it, perfect. If you don't feel comfortable with that kind of strategies, consider that corn might not be your first choice. Wheat is a nice market, but believe me, at least Andrea Unger, me, I did not find many edges on this market. It's a market that moves in a, let's say, bad way. I mean, I don't say wheat is guilty for my failures, but I believe that it's not easy to find good trading systems to work on wheat. At least I'm not able to do so. If you are able, perfect, send me the systems, I will put them to work. But it's not the first market to concentrate if you start your adventure in the trading system development environment, because it's not well responding to the most common models that you might use. Soybeans, meal and oil are two minor sectors, two minor markets, which are good for diversification, but I don't think they are really necessary to focus on. You have enough here. Obviously, diversification is very important. I always say it's the first thing to consider when you want to trade for a living, but not necessarily you have to look everywhere. So these two markets are part of a family. They are liquid enough, even though they are much less liquid than these others, but they are not even the easiest to develop on. So I would say, if you look for something, look for systems on soybean and maybe on corn, trend following medium term, but consider that it's not that easy. Better forget or keep as a second choice wheat, because it's not the best market out there to develop systems on. That's it on grains. Stay tuned, we go ahead with other markets soon. Ciao! Enjoyed it? Click the link below and you will be noticed as soon as new material is available.